Edge-Forex family, this is George here. Welcome to the weekly rundown for the week ending November 8th, 2024. All right, folks, hold on to your hats because we just wrapped up one of the biggest weeks of the year. The US election has come and gone and trading is officially back on. We took a breather during the election storm. Didn't want to throw you into a tidal wave of volatility. But now that the dust is settling, it's clear. The US dollar is flexing its muscles and the path is up. DXY shot well above 105, so there's no question which way this thing's moving. The Trump shockwave. Let's jump right into it. Trump is back in the White House. Like him or hate him, he's got markets buzzing. The S&P spiked 2.5%, Nasdaq popped 2.7%, and the Dow surged 3.6%. And don't even get me started on the Russell 2000. It's up a jaw-dropping 5.8%. Small caps are celebrating like it's a second Christmas, riding the wave of optimism for corporate tax cuts and deregulation. But here's the twist. While stocks soared, bond yields also shot up, flying in the face of what everyone expected. Conventional wisdom would have told us yields would ease, but the market's got other plans. US yields spiked, adding a cherry on top for the dollar's bullish story. Bottom line, with DXY sitting above 105, the dollar's path forward is pretty clear. With Trump back, he's got the trifecta: control of the House, Senate, and the big chair in the Oval Office. Translation, he's got his hands on all the policy levers. Expect a ramp up in fiscal spending, deregulation, and those famous tax cuts. This isn't just good news for equities, it's also a serious signal to the Fed. Powell's in a tight spot now. The Fed's already cut rates by 25 basis points, but December could be a whole new game. With Trump's policies ready to roll out, the Fed might have to rethink its stance sooner than planned. And it wasn't just the Fed grabbing headlines. Across the pond, the Bank of England went for its own 0.25% rate cut, but they didn't stop there. They gave a stern warning that recent budget decisions could drive inflation up by nearly 0.5% in the coming years. Sterling responded by flexing against the euro, pushing EU RSVP'd down close to cycle lows. With sterling gaining momentum, this is a currency to keep a close eye on. Meanwhile, the Nordic currencies Norwegian krone and Swedish krone also bounced back post-election. The Norges Bank held rates steady, giving Norwegian krone some stability, while the Riksbank slashed rates again, adding pressure on Swedish krone. These moves could lead to some interesting cross opportunities in the days ahead. And then there's Germany, a plot twist for the euro. Let's pivot to Europe, where the drama is just heating up. German Chancellor Olaf Scholz fired Finance Minister Christian Lindner, sparking a political storm. With Scholz calling for a confidence vote and opposition leader Merz waiting in the wings, this could shake up the German political landscape in a big way. If Germany shifts its stance toward more infrastructure investment, the euro could get a much-needed boost. Right now, markets are playing it cool, but don't underestimate this situation. A shift in Germany's fiscal policy could be a major long-term bullish play for the euro. All right, let's get into what's on the horizon. Next week has a lineup that could make or break some big moves. We've got Fed speakers popping up all over the place, so keep your eyes peeled for any hints about the Fed's December strategy. Powell and his team are likely going to dance around Trump's plans, trying to maintain flexibility without getting pushed into a corner. In the UK, employment and earnings data are dropping on Tuesday. We've had some mixed signals. Strong employment numbers but weaker payrolls. This release could offer more clarity on inflation pressures and sterling's path forward. Over in Germany, the ZEW Economic Sentiment Survey is out on Tuesday. Germany's economy is practically scraping the bottom, so everyone's wondering, are we finally at the turning point? And the big one, US CPI on Wednesday. With September's numbers still fresh in everyone's mind, all eyes are on whether October's data will push inflation higher or ease the pressure. The dollar's strong, but CPI could send it to new heights if inflation surprises to the upside. Thursday brings Australia's employment data. The job market's expected to hold steady, but with commodity prices in flux, the Aussie might be in for a bumpy ride. Later that day, the Bank of Mexico will announce its rate decision. A 25 basis points cut is expected, and with the Trump win calming fears, USDMXN is holding steady near the pivotal 20 mark. Friday wraps things up with US retail sales and industrial production reports, not usually market movers, but with Trump back, every piece of data counts. Retail sales have been solid. Let's see if that trend continues. All right, folks, here's the takeaway. The USD is on a rampage, bond yields are pushing higher, and the markets have a clear direction. With Trump back, the policy winds are shifting, and the Fed's next steps just got a whole lot more complicated. Sterling's gaining traction, the euro might have a wild card in Germany, and volatility is the name of the game. Stick with us here at Edge-Forex as we navigate the storm. I'll be back with more updates, insights, and maybe a few jokes to keep it real. This is George, signing off. Until next week, stay sharp and stay ahead.